Do you mind if we jump straight into it? What's the first tier of the market, and how do rate pauses affect it?
So typically, in my opinion, there's three tiers to three main tiers to property markets in established areas.
Mm-hmm.
You've got your bottom tier, which is your affordable housing type areas, type suburbs.
Yep.
You've got your middle tier, which is an area where a typical middle income earner, maybe times two in a household, would be targeting to buy houses to live in.
Okay.
And then you got the top tier, which is like the very expensive, very wealthy, affluent areas.
Yep.
During a rate pause, what we've noticed is that at the bottom tier, nothing much changes because everyone needs affordable housing. Everyone needs houses to live in, whether you're starting out in life or, maybe you've suffered financially or whatever the case may be. That type of property is always going to be safe from a numbers perspective.
So you're saying will the rates go up or down? That's usually pretty safe, or just on a pause?
In my experience, up or down and pause is safe. But when it goes up, it actually heats up a lot more. So the affordable housing stuff becomes much more in demand because when rates go up, people are a little bit more tighter with their money. They don't want to overextend or get a massive loan, even though they can. So they become safer. They become more conservative to buy the affordable housing stuff first, and then maybe later on they might upgrade or something like that.
So is this almost where people that would normally have been competing in that second tier drop down to the first tier?
Correct, yes.
Right.
Yeah, potentially. And the second tier is like during a rate pause, I would say they would typically be more confident, like a false sense of confidence. If let's say you're earning a decent amount of money and you're planning to get a large loan to buy like a quote unquote dream property to live in.
Yep.
Typically the loan's going to be a lot larger, right, than because they can borrow more.
Right, because they've got like two incomes, decent income.
Exactly.
Yeah,
they could borrow potentially millions of dollars to buy that house.
Yep.
So they're obviously going to be a lot more sensitive to rate rises, rate pauses, rates in general, right? So during a rate pause, especially after multiple rate pauses, it instills a level of confidence that they're thinking, okay, this is the end of the rate rises. We can confidently buy that house now, maybe get a big loan for it as well.
But this is why you call it a false sense of confidence, because
Absolutely,
it's for a month. Like we don't know what the next month's going to have in store.
100%. You don't know when the next thing's like. I guess at the end of the day, it's just about buying within your means. But I find that this tier is the tier where most people overextend.
If someone's looking at purchasing in that middle tier, it sounds like there might be a little bit of a market uplift potentially.
Yeah. No, I would probably suggest that you might want to just take caution. So don't use the rate pause as an excuse to jump into the market now because you think rates aren't going to go back up.
Right.
You should probably just buy within your means at the end of the day. But that's easier said than done for a lot of people because naturally when people look at houses to live in, they're always thinking, what's next? Like how can I afford the next, thing that's just out of reach? You know what I mean? And for a lot of people, it's just about borrowing more money to do it. It's also the tier where you get a lot of competition, not only with houses, but with the type of people buying them. Highish income, middle class to upper middle class people that are in, corporate jobs or whatever. And it's a competitive world. So they're the types of people that are kind of always maybe trying to keep up with each other and that type of thing.
So your competition is more competitive.
Yeah.
Gotcha. Okay. And what about the top tier? How's it affecting things?
The top tier is the ultra wealthy, affluent areas. These are people that aren't really affected by interest rates at all. So no one buying a $5 million house. I wouldn't say nobody. But very few people are buying $5 or $10 million houses and putting down 20% deposit only. You actually can't, because anything above 5 mil, you have to put down 30% currently anyway. Okay. But let's say even 30%, to get like a $6 or $7 or $8 million loan or $4 million loan to buy a fancy house. Very few people are doing that.
It's a big mortgage.
It is a big mortgage, so they don't do it because that's why they're wealthy to begin with.
Yeah.
So they're typically buying houses with mostly cash, cash from either businesses or, wealth accumulated through generations, whatever the case may be. But this is also the tier where a lot of people tend to swap houses. So they swap going from one fancy house to another fancy house. And that's how, they sell it for a high amount of money. They buy the next one it kind of evens out at the end of the day.
I'm just picturing a TV show spin-off. You remember that show Wife Swap? It's like high-end house swap.
Maybe. The enjoyment would be slightly different component, but yeah, similar analogy.
All right, so if we're summarizing this here, mate, we're looking at the lower end of the market or the entry level.
Yeah.
Realistically, not much is happening. So if anyone's starting to get like really worried or really excited, and that's the market that they play in or about to invest in, probably just like take a knee. It's going to be okay.
Yeah.
But if we're looking in that middle section of the market, maybe tread with a little bit of caution, because like this is where a time where some people could maybe overextend themselves with a false sense of confidence. And if you're listening to the show and you've got $10-20 million houses, send us a text as well. Like, get in touch. We'd love to chat with you, but you're probably going to be fine.
Yeah.
Like, rates aren't really affecting anything.
Yeah.
Okay. All right. Is there anything else that you wanted to add on to this one, man, before we part ways today?
Yeah. As rates pauses or go up, think about what area you're buying in and what tier and how that might affect you in the future. And if you're that middle tier, sort of buying the next family home, don't get a massive loan for it that you probably can't afford. If rates were going to go up, give yourself a buffer and make a decision based on that.
Be cautious.
Correct. Yeah.
Love it. Simon Liu from House Finder. Thank you as always, mate, for jumping on the show.
No worries.